The silence of a weekend is usually a time for rest, but in the financial world of January 2026, silence is the ultimate warning sign. As we stand on the precipice of a new week, a chilling realization is rippling through the private banking sectors. The system offline signs aren't just technical glitches. Across major metropolitan hubs in the United States and Europe, depositors attempting to access their cash at ATMs are being met with a cold digital rejection. The screens are dark, the cards are being spat out, and the customer service lines are dead. This isn't a routine maintenance update. This is the first stage of a coordinated liquidity freeze. At Legacy Economics, we've been tracking the deteriorating health of the Tier 1 banks for months, and today, the dam has finally cracked. Whenever a bank faces insolvency, the first weapon they use against the public is the technical difficulty excuse. We are seeing a synchronized outage affecting 3 of the top 5 global banking institutions simultaneously. They want you to believe that a solar flare or a software update is to blame, but the math tells a different story. In reality, these banks have run out of physical liquidity. They have lent out $100 for every $1 they actually hold in the vault. Now that the great decoupling of 2026 has begun, everyone is trying to exit the burning building at the same time. By taking the system offline, the banks have effectively locked the exit doors, trapped your capital inside, and bought themselves 48 hours to figure out how to survive the Monday morning panic. As you watch this on a Saturday, the clock is ticking toward the most dangerous Monday morning in a century. History teaches us that banking holidays are never announced on a Tuesday. They are always implemented on a weekend to prevent a mass run on the branches. When the sun rises this Monday, thousands of people will be standing outside locked glass doors, reading notices about extended maintenance. This is how the bail-in regime begins. They don't need to steal your money in the middle of the night. They simply need to deny you access to it until the government passes emergency stability acts that convert your liquid cash into worthless bank equity. This is the moment where digital wealth turns into digital dust. The system offline event is not just about a lack of cash. It is the final push toward the central bank digital currency, CBDC Trap. The elites have realized that as long as you have the option to withdraw physical cash, they cannot fully control your behavior. By engineering or allowing a cash access crisis, they create the perfect problem reaction solution scenario. The problem, you can't get your cash. The reaction, public panic. The solution, don't worry, here's the new Federal Reserve digital dollar. It works even when the banks are down. But there is a catch. This digital money comes with an expiration date and a social credit score. They are using this banking suspension to force you into the digital cage. Legacy Economics has obtained data suggesting that the derivative exposure of the major commercial banks has hit a staggering $300 trillion. To put that in perspective, that is more than the entire wealth of the planet. These banks are no longer financial institutions. They are highly leveraged gambling houses. The recent volatility in the silver and gold markets has blown a hole in their balance sheets that no amount of Federal Reserve repo injections can fix. The suspension of withdrawals is a desperate timeout called by the banks to prevent a total systemic meltdown. They are insolvent, and they are using your savings as their last line of defense. Most people never read the fine print of their banking agreements. Hidden deep within those 50-page documents is the force majeure, or systemic stability clause. It gives the bank the legal right to suspend your access to funds in the event of a national emergency or financial instability. They don't even have to prove the emergency exists. They just have to declare it. By taking the system offline, they have effectively invoked this clause without saying a word. You are no longer a customer of the bank. You are an unsecured creditor. And in a liquidation event, the creditors at the bottom of the list, which is you, get nothing. Financial panic is like a virus. It spreads faster than the speed of light in our interconnected digital age. What started as an outage at a single regional bank on Friday has morphed into a global contagion by Saturday evening. We are seeing reports from London, Frankfurt, and Sydney of similar IT issues at major financial hubs. This confirms that this is not an isolated event, but a systemic failure of the global liquidity grid. When the banks stop talking to each other, the gears of the world economy grind to a halt. Trade stops, credit cards fail, and the supply chain begins to snap. This is the 0 hour we have been warning about at Legacy Economics. The images of 1929, men in suits standing in long lines outside of stone buildings, are about to be updated for 2026. But this time, the lines won't be physical. They will be digital. Millions of people are currently hitting the refresh button on their banking apps, hoping to see their balance restored, only to be met with a spinning wheel of death. In 1929, you could at least see the bank building. Today, your wealth is nothing but a series of bits and bytes owned by a corporation that has just turned off its servers. The psychological impact of losing access to your life's work in a single click is a trauma that will redefine the next decade. There are whispers in the intelligence community that this system offline event might be the result of a massive cyber attack by an adversary like the BRICS nations, seeking to dethrone the dollar. While that is a possibility, Legacy Economics believes the threat is internal. The U.S. banking system is collapsing under the weight of its own debt and the great silver decoupling we discussed in our last video. A cyber attack is the perfect scapegoat for the Federal Reserve. It allows them to crash the old system, blame a foreign enemy, and launch their new controlled digital currency under the guise of security. The ATM was once the symbol of banking freedom. 2026 marks its tombstone. Across the country, out-of-service signs are being taped to machines. This is the final stage of the war on cash. By making ATMs unreliable, the banks are conditioning you to accept a cashless society. If you cannot get $20 out for groceries on a Saturday night, you are forced to use a tracked digital payment method. This is not about convenience, it is about programmable money. They want to see every cent you spend, and by suspending withdrawals, they are killing the only anonymous form of currency left, the physical bill. We must look at the Cyprus model of 2013 to understand what happens next. When the banks in Cyprus failed, the system went offline for nearly 2 weeks. When it finally came back online, anyone with more than 100,000 euros found that a significant portion of their money had been haircut, confiscated to save the bank. This is the blueprint for 2026. The current suspension is the anesthesia before the surgery. They are numbing the public, hoping the panic subsides, so they can perform the wealth extraction over the weekend and present it as a fait accompli on Monday morning. While the retail public is panicking at the ATM, the smart money, the billionaires, the hedge fund managers, and the insiders left the system weeks ago. They saw the liquidity indicators flashing red in December 2025. They moved their wealth into hard sovereignty, physical gold, silver, and self-custodied assets. They knew that when the music stopped, there wouldn't be enough chairs for everyone. This is why Legacy Economics emphasizes front-running the collapse. If you are waiting for the news to tell you to get your money out, you are already too late. A society is only 3 missed meals away from chaos, and a financial system is only 3 days of system offline away from civil unrest. When people cannot pay for gas, food, or medicine because their cards are declined, the thin veneer of civilization begins to peel away. We are already seeing flash panics at grocery stores in major cities. This is exactly what the global reset architects want. Enough chaos to justify martial law and a total takeover of the financial system. The banks aren't just suspending withdrawals, they are suspending the social contract. You might ask, what does this have to do with the $180 silver price in Japan? Everything. The banks are failing because they lost their bet against the metals. They used your deposits to short gold and silver, thinking they could suppress the price forever. When the East began demanding physical delivery at 180, the banks were caught in a death spiral. They don't have the metal and they don't have the cash to buy it. Your withdrawal suspension is the direct result of a failed paper manipulation scheme. The gray metal has finally broken the paper bank. Where's the Fed during this system offline event? They are in emergency sessions, not to save you, but to save the primary dealers. They are preparing a massive liquidity injection. But this time, the money won't go to the ATMs. It will go to the derivative desks of the big banks. We are watching the hyperinflationary endgame. Every dollar they print to fix this crisis makes the dollars you can access worth less. It is a pincer movement. They freeze your access on one side and devalue the currency on the other. By Sunday night, we expect a formal announcement of a national banking holiday. They will use a soft term like financial resilience reset or market stabilization period. They will tell you it's for your own protection. They will tell you that your funds are safe. But remember the golden rule of a crisis. Never believe anything until it has been officially denied. A bank holiday is simply a polite term for a locked khazanah. If you are reading this on Saturday, you have less than 24 hours to find any alternative means of liquidity before the steel shutters come down. At Legacy Economics, our mission is to ensure that your family's hard-earned wealth doesn't vanish in a digital glitch. This is why we advocate for tangible wealth. A silver coin doesn't need an internet connection to have value. A gold bar doesn't need a system online sign to be traded for food or fuel. In 2026, the definition of wealth is changing from what you have in the bank to what you have in your hand. Sovereignty is the ability to survive the failure of the system. Be warned, when the systems come back online, they will likely be linked to a new digital identity requirement. To access your restored funds, you may be required to sign up for a new biometric verification system. They are using the fear of loss to manufacture consent for a total surveillance state. They want you to be so grateful to get 50% of your money back that you won't question the digital chains they put on the remaining 50%. This is the ultimate social engineering project. When the clock strikes 9 code a.m. this Monday, the world will be different. The system offline message will likely be replaced by withdrawal limits, $100 per day. This is how they prevent a total collapse while slowly bleeding the public dry. The Monday panic won't be a single event. It will be the beginning of a long, agonizing financial winter. You will see the stock markets halt and the circuit breakers trip within seconds. This is the great reset in real time. This is not a drill. The signs are everywhere for those with eyes to see. The system offline warning is the final tap on the shoulder before the floor drops out. If you haven't secured your physical position, if you haven't built your legacy outside of the digital grid, your window is closing. Stay tuned to Legacy Economics as we navigate the Monday panic together. Subscribe now, share this warning, and remember, in a world of digital lies, the only truth is the one you can hold. Prepare accordingly.